I was good, everybody. It's Jonah. Come back at you with another video. So for this video, I'm going to be doing the recap for Monday, July 27, 2026. And so before we begin, I just want to highlight that I did not take a trade on this day. Now, I know for some of you watching this video, I know usually you want to click the video to see a trade, like a breakdown of a trade. However, I'm still going to do breakdowns even on days where I don't take a trade because I think they're equally as important for you to understand, right? When you have a strategy and you're searching for profitability, not every single day the strategy is going to pan out. And so there's going to be days where you are not going to engage with price or you are not going to take an entry. And knowing when to trade is just as important as knowing when not to trade, right? So on this day, no trade was taken. However, I'm still going to break down what took place so you guys can understand why a trade didn't materialize, right? So jumping right in for Monday, July 27, there was no news, right? So there was nothing for us to worry about. Now, just a quick outlook on the week. Tuesday, there was no news, so nothing to worry about. And then Wednesday, as you can see, there is FOMC. So the rule that I have is that whenever there's a FOMC week, usually I do not trade the morning of FOMC, right? Because FOMC happens at, 2 and 2:30, right? That's when you can expect extreme volatility. Um, I don't trade the day of FOMC, nor do I trade the days that follow FOMC. So in this case, right, the Wednesday, Thursday, and Friday are non-trading days for me. So going into this week, I knew that I would only be behind the computer, actively looking for setups for both Monday and Tuesday, right? And the reason for this is because usually the morning of FOMC, there's usually some consolidation, because price is waiting for this massive news event to then push price and typically take out traders on both sides. And after that massive move, price typically doesn't move as well the following days, or like you don't really see setups, right? So that's pretty much the logic there, right? So jumping right in for Monday, first thing we do is that we identify higher time frame bias, and we do this on a 1 hour time frame, right? So one of the most recent structure points we had this low right here, and the prior swing points to this low was this high right here. Now this high does in fact get traded through, right? If I extend it out, right, this high does in fact get traded through with this high, right? So at first glance, it might, I can understand why someone might think that the bias is bullish, right? Because you're seeing bullishness that takes place here on the 1 hour, right? And this happened, between 5 to 6 a.m., right? Like that high got cleared. So between 5 to 6 a.m. on the S&P, it basically made higher time frame, right? It reversed the higher time frame. However, if you look at the NAS, it tells a complete different story, right? So you see this low here, then it's a high here, then it's a low here, right? So naturally, we were bearish. However, price broke this high, right? With this high right here. And this high was also cleared again with this high. So naturally, right, you expect both pairs to be bullish. However, a fine detail that I'm sure many people glossed over was this candle right here, because this candle is the 7 to 8 in the morning candle. And as you can see, if this was the high that cleared this high, right, what is the previous swing point that made this high? It is this low right here. Now it might be hard to tell, but the low for the gold candle, the bullish candle, is actually lower than the low for the bearish candle, right? And if I were to zoom in for you to see, right, you can see that the gold candle is in fact lower than the black candle. So this is a swing low right here, and this swing low gets traded through with this low right here. So from 7 in the morning to 8 in the morning, right, this, in my opinion, was a break of structure, right? Because this high was formed with this swing, and then the swing was traded through. So, and this happened right before 8:30. So this happened between 7 to 8 in the morning, right before 8:30. So because this was the most recent structure break, I went into this day bearish for both the S&P and the NAS, right? So now jumping in, we'll skip to 8:45, right? So now, if we find 8:30, we look to the left. So this is the candle from 8:15 to 8:30, right? And we look to the left to find the most recent swing high. Since we're bearish, right? So this is the most recent swing high. This is our buy side liquidity, right? Now, if we look, this is the 815 to 830 candle. If we look to the left, the most recent swing high would be this high right here. So this is effectively our point of interest. We want to see price, remember, because we're bearish, right? We want to see price make its way up, clear this high before breaking structure or before reversing and actually going lower, right? The same idea with the NAS. Since we're bearish, we expect price to go lower. So now we have our highs, and then these are the lows that I'm looking at, right? And then you can also mark out more lows, right? You have a low here, and then you also have another low here, right? And the same idea, right? You have, some obvious swing lows going down. So this is pretty much the beginning of the trade idea, right? Now, of course, not, as I mentioned, I didn't take a trade on this day, so not every day ends up panning out how you expect, right? Um, However, looking at this setup, I did think that there was going to be an opportunity. Why? Because there's obvious fair value gaps here. There's obvious gaps here, right? So there's reason for price to want to go up and to tap into these areas before going lower. And the same idea, right, with the NAS. So I was anticipating price to want to go higher. Um, ultimately go higher, and then because it's bearish, to respect this level or to go up and respect this level, right? I was expecting any of those, situations to happen. We don't need this, but just showing you guys what I was thinking as I was marking up the charts, right? So now we see that price is, for the most part, in a range. And because we are bearish, we ideally want to see price eventually clear these highs, right? Because that is our point of interest. If price doesn't clear these levels, then we're not going to do anything. That's the first confirmation that we need, right? So we're just fast forwarding, and as you can see with the NAS, price does in fact tap into, the liquidity, and it taps into our point of interest. So at this point, right, with the NAS, at this point, uh, it's no big deal. We expect that to happen now. This is pretty much what I have now. Usually when liquidity gets taken and we're bearish, now this is what I have. I usually have a mark array and I have a saved array that allows me to put waiting for another push above. Why? Because I want to see after 9:30 open. Our trading windows from 9:30 to 11. So after 9:30 open, I'm waiting for price to make another high. So ideally make the high of the session so that after 9:30, right, it can clear all of this again and then it can push down and then we can take price lower, right? So this is basically what I'm looking at right now. So I'm just watching price, right? And as you can see with the S&P, right, it doesn't clear it, right? It taps it. So a lot of retail traders are looking at this thinking this is support and resistance, and they're selling, right? Because resistance is holding. That's what they see and that's what they think, right? But to me, we see that as liquidity, right? We see this as a double top. Um, and so we're expecting for price to want to eventually raid this area, right? Now we can see fast forwarding, you see that we're getting close to 9:30 now. As you can see with NAS, right, you can see that NAS cleared this low. So this is not necessarily ideal because remember, we are bearish. And so if I'm bearish on price, I want to sell high, right? Ideally, I want price to be up here so that I can sell it and then take price all the way down. I don't want to take price here and then take price lower because to me, with my strategy and the way I trade, I'm basically looking to trade at the very high, pretty much at the high of the session, and then ride the wave all the way down because then, you have many more targets to reach and, greater risk to reward rather than trading around this area and then trying to take price lower, right? That's not what I look for. And the other issue that I have with where NAS is at right now is that if I'm bearish, I don't want price to be making the low of the session, which right now, right, this whole brown background that you're seeing, right, all of this brown area, that is the start of New York session. Well, the brown, yeah, is when New York starts, which is 8, and is also overlapping with London, right? So this is the New York London overlap. Um, and if I'm bearish, I do not want to see price making the low of the session, which obviously this is the lowest point in all of the brown. So NAS looks very undesirable to me, and if I'm looking at opportunity, I'm potentially looking at the S&P, right? Because this is a massive liquidity pool, right? So right now I'm leaning significantly more towards the S&P because it has a lot more of my attention. So now we're fast forwarding until 9:30, getting close to 9:30. So now we are at 9:29. So as you can see, right, not only did the NAS clear this low right here, it's also getting really close to the next low, which if I look to my left, it is pretty much the low of the entire day. So once again, if we are bearish, we want to sell at a high point, right? Sell somewhere up here to then, sorry, remember, let me put on the 5 minute time frame. So remember, if we're bearish, we want to sell up here. We want to sell high to then take price lower. We don't want to sell here and then take price going down, right? Like, of course, you can still make some profit, but like, we want to sell high and buy low, and vice versa. We're bullish, we want to buy low and then sell high, right? Like that's sort of the process. So for me to see NAS just pushing down and already clear this target, so we can get rid of that, right? It already cleared the low, and then it's already pushing towards this target, which is literally the low of the day. Then there's very little reason for me to want to like sell, because if price clears this level, there's no guarantee that it's going to continue going down, right? It can continue going down, right? Price can continue melting, but if it cleared the low of the session and the low of the day, then I'm not interested in trying to chase price, right? I don't want to chase price when price is already at the bottom. I want to sell when price is up here, right? And going back to 1 minute time frame, right? This next candle, this is the 9:30 open. Oh, sorry, this is 9:29 and 9:30. So now this next candle, this is a 9:30 open. So as you can see, 9:30 open pushes down even further and makes the low of the session, right? So this 9:30 open, it went lower than the previous candle, right? You can see the lows. So when that happened, immediately I was no longer interested in the NAS, right? Because the NAS made the low of the session, and that's not what I want. If I'm bearish on price, I want price to make the high of the session, right? So then we can sell from down here, not for price to make the low of the session. Because then if I sell it, you know, it won't be as good of a risk to reward, and I don't want to risk that, right? So I'm no longer interested at this point. I'm no longer interested in the NAS, and all of my attention pretty much shifts to the S&P. However, even with that being the case, right? This is the 9:30 open candle, and you can see this candle is getting low, is getting close to this low right here. So if I see price, because sometimes price can go down and make equal high, like can make equal lows, right? Same how price made equal lows right here, right? You're seeing that this level here did not go above this level. So it's very possible that price could go and make equal lows and then go up, clear liquidity, and then make its way down. But as you can imagine, right, with the next couple candles, it came and cleared this low. Now remember, this 9:30 candle right here to 9:31, it made the low of the session. So because of that, I was also out on the S&P as well. So if I were to fast forward it, right, a few 15-minute candles, you'll see that price, right? If I go on the 5 minute time frame, you see that price absolutely obliterated all these targets, right? So you see all the previous targets I had, this was like the low of the session. This was pretty much the low, almost the low of the day. This was prior to the day, right? You're seeing massive fair value gap that like needed to get filled, and price completely fills it. And you see prices going out and taking out these additional lows because, sorry, if you look down here for the S&P, right, doesn't this also look like equal lows, right? It looks just like equal lows, and then what the price do? It went right under it, right? So you're seeing what price is doing, and you're seeing how price, it just, it literally just tanked, right? Like, of course, if we have sold, we would have made profit, but once again, price is already traveling down and it's moving so aggressively, and I would much rather trade price up here and take it down than to try to enter right here and take it down, because you have to remember, trying to enter around here is already much lower probability because these lows were already taken, these targets were already taken. So there's less reason for price to want to continue. It just so happened to continue, right? And the same idea with the NAS. You look at the NAS, right? You're seeing a low here. These lows got taken. You see a massive gap in price, right? It got filled. Then you're seeing another low right here get cleared. So, like, this is what I mean. This is why, right? If you've been watching my videos and following my channel, right, you've heard me say that determining the higher time frame bias is 80% of the work. And the reason for this is because when you have a directional bias, right, you are able to um basically determine the direction that price is most likely to head to. And once you have the direction, then the rest of the work for you is to be able to find an entry that is in alignment with the directional bias, right? And my entry was to, take out previous liquidity, and that didn't necessarily happen. Well, it happened right here, but this liquidity grab happened at 9 o'clock. It happened before 9:30. If price came up and tapped this liquidity after 9:30, at 9:30 or after 9:30, then I would have, looked to get an entry, and then I would have been in this position to take it all the way down. But this trade didn't meet my confirmation, so I didn't take the trade. And this is how you need to be as a trader. You need to be disciplined, and you need to have patience, right? Because there's a lot of moves like this that are going to happen where your confirmation are not going to be met, but price still has a large move. And you need to be disciplined enough to not experience FOMO, right? If you have rules and confirmations that are very logical and strict and you abide by it, then you won't be experiencing FOMO, because even though this aggressive move happened and sure, you could have made a lot of profit on it, it's just my based on my strategy, there was no entry. Well, price never even cleared liquidity for this pair, but on this pair, this didn't happen after 9:30, right? The liquidity grab happened at 9. So because there's no liquidity grab, there's no high that was made after 9:30. There's nothing for me to do, right? But you can see we were correct in our directional bias, right? Because I'm sure there's a lot of traders who anticipated this day to be bullish because they were not aware of the fine detail of this low being taken, right? This low got cleared with this push right here, which was a signal that price wanted to go bearish. And I'm sure that so many traders overlooked this and they were trying to go bullish on this day that was extremely bearish, right? But you see that price completely fell. It completely just like melted, right? You see the aggressiveness in the move. Now, the other thing that I want to explain to you guys and show you guys is effectively the machine. And what I mean by the machine is that what you need to understand is, and I'll full screen the S&P for this, right? What you need to understand is price is rigged, price is manipulated, it is 100% controlled, and it is controlled by a machine. So there is certain elements that the machine does as far as like an entry model, right? And this right here is the perfect example. So I'll use a 3-minute time frame. So one thing that I'm looking for with my entry model is, first I want to see a liquidity grab. Now, of course, this liquidity was not taken here. However, if you also pay attention to the fine details, you'll see that a high was cleared, right? Usually when price is bearish, price has a tendency to clear previous highs, right? If I were to unfull screen this, right, you'll see, right, this high cleared this high, right? Clearly this high tapped into the previous high. And so there's a lot of traders who only trade market structure and say market structure is king, market structure is the end all be all. But I'm here to tell you that it's not. Market structure alone is not the answer, because even when price is bearish, because what happens after price clears this liquidity with this push up, what happens? Price immediately just blasts lower, right? Because that is the tendency of bearish price action, to want to clear previous highs. Now, if we look at the S&P, right, my full screen on 3-minute, you're seeing that this high did in fact get cleared with this push up here. And then after this happened, you're seeing after this high is formed, right? It gets formed with this being the previous swing point. This swing point gets blasted through with displacement, right? Because you see one black candle, two black candles, three black candles in a row that blast through this low. And the rules that I have is that the displacement range, which is the low to the high. You want to see a fair value gap form within this range, and you do see that, right? You see a fair value gap get formed here, as well as a fair value gap that gets formed here. And even though price did not enter this fair value gap here, price does in fact enter the fair value gap here. So I'm showing you this piece of information right here to show you guys that price is controlled, it is manipulated, right? And there's a certain machine and algorithm that when it appears, it leaves the clues that it's entered, right? So when I seen this move right here, I expected price to take off because look at this displacement, right? Not only did price go up and clear a high, it went down and broke structure at this level, and it did so with displacement because look at this. Look how many consecutive bearish candles price gave you, right? And then it left a gap, and then price taps into the gap right here, and look how as soon as price taps the gap, look how fast it just rejects, right? So of course I did not trade on this day, but I'm showing you this right here to show you that this is what we look for as far as our entry model, right? This is what we're looking for. And so even on a day where no trade was taken, right, you can still learn valuable information. There's still important things you can take away. Now if we look at the NAS, right, it didn't happen perfectly, but you can see the same idea here that at 934, right, and at 934 you're seeing for both pairs you have the same phenomena, an aggressive bullish candle followed by displacement, followed by a bunch of bearish candles that move aggressively to then break structure. So once I seen this, I anticipated that price was probably not going to go up anymore. That price was most likely just going to go down. And this was just signs of price just delivering extreme bearishness. So there was no trading opportunity, right? Oh, perfect example here, right here for the NAS, right? So you see this liquidity got taken with this high. Then what happens after the liquidity gets taken? You see a structure break, right? Going down, right? Because this is the previous swing high prior to this move, and it gets broken with this bearish candle down. Now this bearish candle, it might be a little bit hard to see, but this bearish candle does in fact leave a small fair value gap, right? If I zoom in, you are seeing a fair value gap right here. And then what happens? Price clearly respects the fair value gap and then breaks lower, and then price completely just, right, like price just completely tanks right after, right? It goes straight down. So even though this was not the best example, this right here, this is what I'm looking for my entry model, right? I want to see some sort of liquidity get taken with the high, and then after liquidity gets taken, I want to break structure, right? I have to wait for liquidity grab because that is the first element. And then once structure is broken, I want to see displacement. I want to see consecutive candles. In this case, it were bearish candles, right? To break lower. I want to see momentum. And then I want to see a gap left within the low and the high, which there was, and I want to see price tap into it. And so if this entire move happened after 9:30, I would have been in the trade and I would have been able to capture the entire move down. However, this happened at 9 o'clock. And so there's nothing for me to do. I'm just going to sit until 9:30. And obviously by the time 9:30 hit, we were already at these lows, right? But I still wanted to give you this breakdown to show you guys that this is the model right now. Of course, this gap is on the smaller side, usually because after 9:30, there's a lot more volatility in the market, so you can expect the gap to be bigger. But this is effectively what we're looking for. This right here, right? Liquidity get taken, and then structure break, and then displacement, and then a fair value gap left. And then that's where we enter. In this case, we enter for a sell, stop loss above the high, and then we're targeting all of the targets down lower. So once again, no trade was taken, but hopefully you guys find value from this video. Hopefully it was a clear explanation of what I look for in the logic behind it, because most traders, they think that market structure alone is king. But if you think about this logically, right? price, at least on this like short term, you would think price is bearish because price, from this high, it went down and made a new low, right? You see how price did this, right? So you're thinking price is bearish. But then with this wick up that cleared this high, right? For people who believe in only market structure, this would now tell them that price is bullish, right? Because this move up broke past this previous swing point. So any traders who just trade market structure are going to think that with this push here, that price is now bullish. But if you believe price is bullish, then you probably would have tried to take an entry, right? You probably try to buy price when price is low. So you probably would have tried to go long, right? Probably stop loss under here. You would have tried to go long thinking price is long, but then you would have immediately been destroyed on this position because you would have been on the wrong side of the market. So this is why it's important to have higher time frame bias, because then you have a higher time frame perspective and you stick with that bias the whole time. And then on top of that, most traders, when they think these runs happen, they switch their buys because they think price is bullish. But we understand that price is not going above this level to be bullish. That price is going above this level because it wants to clear liquidity. Because, right, resting above this area right here, all of this is buy stops, right? So buy side liquidity. And so if price is able to go above this level right here, right, and effectively, where's the rectangle? Okay, price is able to go above this level, right, with this move right here. What is it now doing? It went above this level so that it can activate buy stops, right? So there's a lot of buy orders flooding the market. So just think everyone's buying now. Why? Because there's a lot of traders that believe that if price were to go above this level, right, there's gonna be it's a market structure shift. So then now price is bullish, right? Just how I explained to you guys, right? People think that it's going up here and now it would be bullish. So a lot of buy orders get activated, which is the perfect counterpart for these sell orders, right? Price is pushing up here so that it can sell, because trading is a game of pairing orders, right? In order to trade is an exchange happening, right? You need buyers, both buyers and sellers. So if I'm able to push price in an area where I can expect there to be a lot of buyers or that people are going to be buying, right? Think about breakout traders, right? They look at this and they think this is resistance. So the moment a candle is forming up here, they're buying because they think price is going to break out. But we're expecting price to be bearish because we're bearish on the higher time frame. So we're looking at this as an opportunity to sell. That price is just trying to purge liquidity. So once price pushes above, it activates so many buy orders, which is the perfect counter for sell. So now price can sell price and push price lower. This is the logic, right? And I'm explaining this to you guys because this is the logic that has eluded me for so long, because trading never made sense until it was explained to me that trading is about liquidities and orders. And now it's so clear in my mind, right, that this is the game that's being played. And until you understand this game, you're probably going to be confused with trading forever, right? You need to have the bias and then stick with the bias and understand that there's certain behavior traits that price does when it's operating in a certain bias. Now, when price is bearish, of course, it clears previous highs like it did here, and then it pushes lower. So that's pretty much the breakdown on this day. Of course, I didn't take a trade, but what you see just happen with the NAS is exactly what I look for every single trading day. I have a bias. I want to see the high of the session be made after 9:30, right? Clearing previous liquidity. Then I want to see a break of structure happen, and then a fair value gap within the structure low and the structure high, right? That's the displacement range. And then I take a trade from the gap all the way towards the targets, right? Target here, right? And all the way down. That's what I'm looking for each and every trading day, right? So that wraps up the video. Enjoy the video, to leave a like and subscribe as you're on the road to a million subscriber, guys. So once again, it's Joel, and I'm out. I'll see you guys for the next video.